Hi everyone, welcome to another video on my free Forex trade signals. In this video, I've got a very important lesson and we're going to review one trade signal that I did issue this past week. Most importantly, we're going to talk about the importance of levels and how you use them. And I want to make sure that you understand what I mean by levels. Now, I'm getting more emails than ever before. So thank you very much for the feedback. It's absolutely amazing. I really appreciate that. And you guys are telling me that you're learning. First of all, you're learning, which is really super important. Then the second thing you're telling me is you're listening. Okay, because you cannot learn unless you understand the importance of listening to exactly what I'm saying, whether it's through my YouTube videos or through my emails, and you're following my free signal. So that's the most important thing, because I keep telling everyone, just follow my advice and do exactly what I'm doing. So finally, the most important thing and the thing that makes me really happy is that you're making money for the first time. Now I know most of you are still trading on a demo account, which is what I asked of you. I don't want you to trade on a real live account, but and some of you are trading on with a live account. So again, use caution when you're doing that, but I really am advising you to trade on demo, and I'm glad that you're making money. And a lot of you are saying you're making money for the very first time. Okay, now my name is Martin. I'm a proud Canadian trader, guys. I've been offering my free trade signals for maybe close to 2 months, and it's going really well. I'm still working out some bugs, and I'll explain what I mean by that in during this video, because I did make a big, huge mistake, which I do want to talk to you about. Okay. Now, for you to receive my free Forex signals, you have to, first of all, send me your email address. Okay. Send me your email address to to mine, which is mskyj007@gmail.com. Okay, so to receive the signals, you got to send me your email address, and then I'll put you on my VIP list. Before we really get started in this video, I want to offer you again my humble disclaimer, guys. This is so important. And there's a few of you, I've gotten some interesting emails over the last few weeks. There's a couple of people out there that really are not following exactly what I'm saying. So I need you to read this over again, but just in case, I'm going to say it out loud. My free signal service is an educational program only. Okay, I want you to understand that. It's education I'm providing you. I'm not giving you investment advice. I'm not telling you to take any trades. And I don't want you to hold me if something goes wrong. Right now, it's an education program. Okay, don't blame me if you lose all of your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions, and you know who you are, because I did receive some emails from some people. So this is super important. Remember, for now, you're trading on a demo account only, with a maximum of 1% risk of your account balance. Now that again is super important. 1% risk of your account balance. So if you have $500, I only want you to lose $5, which is 1% of 500, $5 in case the trade is wrong. If you have $1,000 your account, that means $10. So you cannot afford to lose at this point, or at this point of your learning process, you can't afford to lose more than $10. If let's say you have 5,000 in your trading account, then you cannot lose more than $50. Okay, so you have to adjust your lot size accordingly to trade within those parameters. That's important to know. Okay, moving along. Last week, I want to take a look at one particular trade signal that I did issue. It was on December 1st, and that was the buy British pound USD. So I issued you a email alert on December 1st telling everyone to take a trade on British pound USD, and it was a buy trade. Okay. Now, most importantly, and this is the reason for this particular YouTube video, when I issue a trade signal, I give you the levels which makes the trade possible. So what do I mean by levels? What are the levels and how do you understand them? And also, I'm going to give you the lesson on exactly how I place the levels. Okay, so that's really, really important. This is the actual signal on December 1st. It was this. I just took a screen capture pretty well of my email alert that I sent out to everyone who subscribed to the free signal service. Guys, it says here on December 1st, buy the British pound USD. The entry was, you can see here, 1.3411 or better in case price goes lower first. Now, I'm going to explain this a lot further because I know there's a few people out there that are a little bit confused about this part of the information I send out. So it's this one that says, I give you the level, the entry here or better. Here's the stop loss for this particular signal. I gave you the 1.3304. So if the trade goes against you, you would be stopped out. And I have a little star there, guys, and this is where I made the big mistake. So I'm going to explain that when I show you my chart, okay? So this was a huge mistake. I give you a first profit target, so TP stands for take profit. There's the first one here at this level, and then the second take profit here. I usually I hand out instructions whenever I give you a trade signal, and I say here you can open up 2 trades, each with half of your normal lot size. So if your normal lot size, for instance, tells you that you can open up a trade with, let's say, 8 micro lots, okay, just as an example, then you would open up at the entry here, okay, the entry, two different trades. One trade here at this entry, and another trade at the same entry or about the same entry. So you open up 2 trades at the same time, each with 4 micro lots. So if you were allowed to trade with a total of 8, then you can open up 2 trades with 4. Okay, 4 plus 4 equals 8. Put a stop loss, the same stop loss I have here on both trades. However, this is the reason why you have to open up with 2 trades. You put a take profit target, the first profit target, on one trade, but not on the other one. Okay, so if price goes up and hits the TP1 or the take profit, the first take profit, you'll be stopped out on one trade, but the other trade will be kept open. And if the price goes much higher, then the second trade, which is still open, will gain even more profits. Okay, so that's what I mean by all that information. Now, on this particular trade, I also said USD had a bad day yesterday and or on the previous trading day, and may pause. That means may rest or even retrace a bit first. Okay, and even though British pound at that time was very strong, I had good reason to believe that possibly price might retrace first before going higher. But British pound is very strong now and USD is weak. Now the follow-up, okay, and I say here I will follow up tomorrow. Now the next day on December 2nd, now remember I issued the trade alert on December the 1st, but on December 2nd, my update said keep the trade open, do not close it. So in fact, on the next day, as I said right here, and I was, thinking that the British pound USD might retrace a bit. It actually did on the second day. And this is where patience is so important, guys. Now, I'm going to show you the chart. We're going to do that in just a moment, but it's important for you not to panic, understand my instructions. And finally, I said, keep the trade open, do not close it. But this is where I received on this same day, December 2nd, I received some emails from some traders who said that their trade had actually closed, was stopped out. And to that was a huge surprise. I could not understand it because price did not actually reach my stop loss on my chart. However, when I looked up here, the stop loss, in my horror, I saw that this stop loss was actually at the incorrect level. Okay, so we're going to look at the charts, like I said, in just a moment. I'm going to give you further explanation. And when I talk about levels, again, for those new traders, these are the levels I talk about. The levels are, first of all, the entry. Give you the entry level. I give you a stop loss level. I give you a first take profit level, and I give you a second take profit level. Okay, so those are the levels I issue. Those are the levels you trade by. Okay, now as I mentioned, after receiving some emails, I investigated and tried to understand why this trade, British Pound USD, was stopped out with the stop loss I had given. Well, here's later on, I took a look at my charts and I noticed something very interesting. Okay. In fact, I thought it was going crazy because I know on my charts and my trade that I took, I was not stopped out. So I took a look and my stop loss was set at 1.3275 based on my 1.5 ATR rule. When I show you the chart in just a moment, we're gonna discuss the ATR rule and the stop loss. But on my charts, I had 1.3275. Incorrectly in the email when I issued my British Pound USD signal, I gave all of you the wrong stop loss. I gave you 1.3304, and that was crazy, guys, because price actually went some pips below this, and you guys were stopped out, or those people that actually used the stop loss, right? So first of all, thank you very much to those traders who actually emailed me and caught the fact that they were stopped out and let me know. And I'm just wondering what happened. I didn't get a lot of emails on that. What happened to the rest of you? You guys, I need you guys to engage with me for two reasons. One, to let me know that you're following my instructions, and two, it actually alerts me to maybe possible mistakes on my side. So again, I don't know why I gave you the wrong information, but anyways, the importance is you should still be trading on a demo account, not on a real live account. Okay, so we're going to go to the charts. Okay, guys, this is the British Pound USD daily chart. Each candle is a day's worth of price movement. Okay, and it was on December 1st. I gave you the signal. Here's the entry: 134.11, right there, guys. Can you see it? So the signal was given right there. Okay, and you can see over the next few days it did go up and actually did reach our first profit target. So far, it has not reached our second profit target, and I'm kind of thinking price may reverse. So if you guys want to, if you're still in profit, just close the trade, because I don't like the look of that candle. You can see right here, price could definitely reverse. So, when you look at this video, you can decide if you want to close it in a profit. Be happy, take some profits off the table. But here's the level. First of all, right there, 34.11. You can see that. Okay, the next day, price did reverse. You can see that right here with this candle. Price went down and closed there. And a lot of you guys were panicking and thinking, well, maybe it's going to keep going down. Now, the problem was with my stop loss, I originally gave you the stop loss at 133.04, which is actually right about there. So you see price on this next day was a huge down day. You would have been stopped out if you would have had the stop loss in place, but actually reversed all the way back here. And that gave me, this particular candle is kind of a reversal candle, which gave me, which told me not to worry about it. And indeed, you can see in the next day, price went up much higher and actually reached your first profit target. So within 2 days, you would have made profits on at least one of your trades, okay? But this is the part that worried me. I incorrectly gave you my original signal, the stop of 133.04, which is right here, guys. You can see price went down below and then went up high, but you would have been stopped out. On my chart, guys, take a look right here. This is the stop I had on my chart, 1.3275, and this candle that reversed the next day did not go down, and I myself was not stopped out. I was still in the trade. So that's the stop I should have given you, 1.3275. Now, let's erase that. How do I calculate the stop loss? Okay, on the signal candle, this is my signal candle right there. There's the signal. There's another signal right there. I actually, let me just erase that. You can see this strong signals. That price is going to go higher, and I gave you the trade signal right there at 34.11, right? Okay, but at the entry, like on the signal candle, the actual ATR was 91 pips, guys, and the stop, my stop, and your stop should always be 1.5 or 1.5 times the ATR. So 1.5 times 91 pips is actually 136 pips. So I place my stop from here 100 and right 136 pips lower, which gives you 1.3275. Okay, so this stop is correct. The one I gave you is not correct. Okay, and you can see the next day candle did not come down and stop me out. Okay, so it's always 1.5 times the ATR on my trade signal. Okay, that's where you place your stop. So of course, if price is going higher, your stop will be lower, right? Your stop will below your trade. If my trade signal is going down, your stop will be higher than the price going down. Okay, understand that as well. I don't want you, but you can't go wrong. I mean, if you're just following my instructions, I mean, giving you the actual level right there. Okay, so that's how I do the stop loss. It's calculated 1.5 times the ATR. In this case, the signal candle was actually 91 pips. Okay, 91 times 1.5. Okay, is a total of 136. Okay, 136 pips. From here below, that's where you place your stop. Now, the first profit target, it's again is your choice, depending if you're a conservative trader or an aggressive trader. But if you're aggressive, then you calculate 1 times the ATR. In this case, it was 91. So basically 91 pips higher is where your first profit target would be. I like often using 80% higher, which is a more conservative approach. So 80% of 91 pips. So it's not quite 1-to-1. In that case, it's not 1 times the ATR. So conservative traders can calculate the ATR and then decide on using only 80% higher. Okay. It's a better chance for price going up and hitting the 80% mark than a full 100% of the ATR. So guys, that is my important lesson on levels today. Hopefully you understand. One more important thing, which is I've gotten a few emails, people still placing incorrect orders. So if this is my entry level 1.3411, guys, right here, when I say when I give you the level or better, that means you're waiting for price to come down lower, and then placing a lower entry. Okay, so that's when so if I give you a buy signal and I say here's the buy signal at this level or better, you want price to go lower first, and so you get in at a better price, and then when price goes in the right direction from here, for instance, you're making a lot more pips than if you would have gotten in here, right? So again, this is really important. On a buy trade, this is buy trade, okay? Here's my entry level, okay? When I say better, wait for price to go down and then get in, take a buy trade lower than my entry. If we're taking a sell trade, okay, and I say better, okay, and here is my entry for sell. I give you this level and I say, or wait, or take a better entry. Then you're waiting for price to go back or retrace, get in at a higher level than my entry, so that when price goes in the right direction, you're making even more pips than the original entry. So here again, buy trade, you want price lower than the original entry. On a sell trade, you want to take better means waiting for price to go back and waiting to take an entry at a higher price than my entry. Okay, so that wraps it up, guys. So again, if you want to receive my free signals, guys, if you want the signals, you got to send me your email address and give me some information on where you're located around the world and maybe what your trading experience is. I'm not going to judge you, and I'm not going to sell your email to anyone, to any other marketer, guys. It's just my way of sending you the free signals. So once I get your email address, I'll put you on my VIP list. And then you would send your email address to mine here. You can see right here down below. It is called mskyj007@gmail.com, guys. So that is my email address, okay? And finally, if you really like this email and you like where you're going, and if you're learning for the very first time, because I know a lot of you guys were struggling before, and especially the new traders, again, don't forget to subscribe to my YouTube channel. You hit the subscribe button, you hit the bell, because you need to hit the bell icon below my video to actually receive future videos into your email address box, okay, to your email box inbox. So that's why you need to hit the bell button as well. And also you can click on the like, and if you want to comment, send me some comments. I'll get back to you. Take care, everyone. Thank you very much for watching, and we'll have another video for you next week. But if you subscribe, you'll get next week's videos. Take care. Next week's signals. Okay, take care, guys. See you again.